Aussie US dollar. The Aussie has traded from its 4-hour time frame a 50% short to target. This short was drawn from the 95.06 anchor to lows. This short was talked about and taken. Hopefully everyone took this trade. I know I mentioned I took it. 95.06 anchor to lows, full 50% short traded to 93.70s. Stops were above the 94 handle. First targets were the 93.40s. So you got your plus 30 ticks, minus 30 ticks for your stop. You weren't stopped out on this push up to the 94s. Hopefully you weren't. My stops are almost always where the 65% line is originally. So anyway, you got first targets filled, 61.8 lines held, and the trade went towards its 91.80 targets. Those targets have been filled, and we are currently holding a 15-minute extension drawn lows to lows from the 91.90 anchor to lows. This trade has gotten its first target filled at plus 10 pips. Stops are still at a 91.60, and downside targets are towards the 90.90s. This 15-minute trade, if it continues to hold and go to target, this 15-minute setup, which is a 91.89 extension short, so we go lows to lows until it breaks. If that continues to hold, we'll start to draw up on the 4-hour time frame. Instead of the next in the series short, which is drawn from entry highs to target lows, we'll actually start to draw up a low to low extended short. And that resistance is coming in at 91.80 to take you lower and into potentially this 50% long for the Aussie. It would be 3 waves down into the 90.80s. Please keep in mind that equal legs have traded. That is highlighted purple now. A, B, C. C should terminate around a 91.40 to a 90.80. That's between the 100 and 123.6 line. So as you can see, you have a full 50 and equal legs down coming in and producing an inflection zone between 90.80s and 91.40s that we would expect to get some kind of reaction back. It starts breaking shorts. You can trade the 1 hour or 15-minute time frame in ambush trades off these levels if you don't want to take the larger level and all the risk associated with it, which at this time, buying 90.80s has about 100 tick risk, and the 100% line here, buying the 91.40s, has about a 70 tick risk. So be careful, but this is 3 legs down so far. I know this is kind of scary, but we are tracking this closely, and we do have, invalidation zones and, next in series shorts to actually watch and continue to monitor this downtrend, but it is definitely a downtrend. Don't forget, shorts traded to target and maybe actually breaking through targets to the downside. So it's still shorts for now in terms of sub 4 hour, but we're coming in on that 4 hour inflection zone, and we need to be ready for a potential turn. Even if the turn doesn't happen, you still get ready for it, and you still look for it into when it occurs at major levels like this. Maybe you're not trading it, like I said, but you're looking for it because that tells you something about the market. It tells you something about what could happen next, even if it's in your favor or not.